understand this a little bit more. Gamma squeezes. This is a good example of a gamma squeeze, VXRT last night, VXRT. And with all the chat about short squeezes, here's a chart of a real-time gamma squeeze on VXRT in the last hour of trade. Large calls out of the money, buying into that trade, short expiry date, market makers rush to cover exposures, and a really easy rise in prices. And these are great scalping opportunities for stock traders. Anytime you see a gamma squeeze, think about the logic behind the gamma squeeze itself. Now, I want to show you another one. Here's a second one in this stock here. Again, you can see a gamma squeeze. This is on SPCE, one of our interesting stocks. We've had the SPCE quite a lot. And this is another gamma squeeze here with a decent sized long call. And as price moved above, the share volume increased dramatically. You can see just above here, the share volume increased. When the share volume increases, following a large position, now this is a large out of the money call. I mean, the stock's trading at $52 and they bought 85 strike calls. That's a big strike price to pay, right? But obviously because of that, they're really quite cheap. Because they're really cheap, people can buy a lot of them. Because people can buy a lot of them, there's a huge amount of risk getting taken on by the market maker should the price explode. And they have to be very cautious with these large trades. Now, in money terms, they're not as big, perhaps. You know, you're not talking about $1 trillion somebody's just invested in a $30 out of the money call option. If they had, the price would have went through the roof with hedgers coming in. The gamma squeeze is created by who? Who creates the gamma squeeze? The market makers. And the reason why the market makers create the gamma squeeze is because they shorted this position. So if you short that position, if you sell that call, you've got to buy stock. So when I see them buying stock following a call option like this, then I'm going to be aware that they are very concerned about this one. If they don't buy stock at the time, Cliff, there's nothing there to be concerned about, right? If you don't see them coming in and saying, you know what, I'm going to take a bit of that stock action, I better cover myself. If you don't see that happening, there's nothing to worry about. There's just no trade. But when you see following that call option, when you see that increase in volume driving the price away from that level, it might be too late to do the trade. You might not be happy to step in, but just be aware that they are now hedging that exposure. If they're hedging that exposure, they're worried about that exposure because they're giving away some of the profit by doing that. And therefore, when the price trades back down into that call level of 52.08, you can see that that was the price they paid. That's the price they paid right there, right? $52.08, that's the price they paid. That was a spot price, not the price they paid, but that was a spot price. So when the price traded back into 52.08s, that was a nice place to start bidding into that trade, wasn't it? And obviously the trade left $52.08, rallied up to $57.08 for a $5 profit on a $50 stock. Now you could obviously have decided to buy at the money calls at this stage instead of taking an option, a stock position. Instead of buying the stock itself, you could have bought at the money calls and made a lot more, but that's still $5 on a $50 stock trade, guys. That's still 10% non-leveraged profit on your money that afternoon. 10% non-leveraged in one trade, in one evening session over the course of about an hour. That's one of these ideas. When you're looking at these gamma squeeze type trades. And one of the things you're looking for is you're just looking for those out of the money call options getting played. You're just looking for that and you're asking yourself, could it be? Is it? Potentially? And this is one of the things that you just start paying attention to, guys. If you're an options trader, if you're a stock trader, if you don't trade stocks and all that kind of stuff, if you've got no desire in it, it's absolutely no value to you whatsoever. It makes no difference. It's not going to float your boat. It's not going to rock your world, you know. But it's still something to pay attention to, guys, if you're interested in stock trading itself. Nice. Yeah, it's all right. It'll do if you're a stock scalper. It's certainly one of the things that you would be very, very, very interested in. But if you're not a stock scalper, then it's not actually that interesting.